There is so much talk and so much noise around the Ethereum treasury companies, around an Ethereum strategic reserve, around Tom Lee buying more and more ETH, that people get incredibly excited. But could this potentially be the point in time where the market is a little bit too excited? Let's have a look whether or not the current price appreciation of Ethereum is justified, if we can go higher from here, or if this is a potential turnaround and it might make sense to rather take some profit. Now, this is why everybody wants to buy Ethereum. It's the continuous accumulation through the ETFs, so that's in blue, and through the strategic ETH companies, that's in green. And the sum of both are now holding 44 billion worth of Ethereum. And that development, of course, has helped Ethereum outperform the rest of the entire crypto space. So this is the Ethereum dominance. It looks at how much of the entire market cap of all of crypto is currently in Ethereum. So it's a percentage number. It tended historically to trend between 21% at the upper end and 7% at the lower end. We have anticipated the bounce here on this channel. Feel free to check out the videos around the middle of April of this year. We made a lot of money with this recent rally, but the question is, are we going all the way up to 21% again, so a further outperformance of 45%, or are we going back down to where we came from just a few months ago? Now, for this video, I think it's good to step back a bit. Have a look at how is the usage of Ethereum developing over time. How many transactions are there on chain? How many active wallets are there on chain? Is there potentially some correlation between the usage, maybe the decentralized exchange trading volume and the price? Let's have a look at all of those metrics and try to figure out where we are headed from here. So for example, have a look at this. This is the number of transactions on the Ethereum chain. It's a monthly chart that starts in August of 2015. So that's now 10 years of data. And we can see clearly how Ethereum was pretty constantly growing up until May of 2021. And since then, the number of transactions on the Ethereum chain are quite stable. We are close to the all-time high right now, but we haven't really grown that much in the last 5 years. Over here, we have the number of active addresses on Ethereum, a very similar development. Again, we are close to the all-time high and we haven't seen that much growth recently. Over here, we've got the number of new addresses. This tends to be a bit more volatile, but the overall trend, again, is very similar. Somewhere between 2020 and today, we have seen a stabilization of the usage on the Ethereum chain. Now, since 2020, the price was definitely not just going sideways. We still had a very nice rally of almost 2000%. So even after the usage of Ethereum has peaked, the price development did not peak. And of course, we all know the reason for that. It's a transition of Ethereum from being actually used on chain to becoming an alternative store of value. Now, there was a major event in September of 2022. And that was a change in mechanics of how Ethereum works. It used to be a proof of work blockchain. So everybody could join the Ethereum network, use their GPU, their graphical processing unit, to mine Ethereum, to basically convert electricity into ETH tokens. That has changed with the merge event. So for the last 3 years, Ethereum was a proof of stake, not a proof of work blockchain. Thus, it became more energy efficient, but also less people joined the network afterwards, right? Everybody just tried to play around with the system, see if they can make some money on the side, got introduced into the ecosystem that way and started speculating. That inflow of new adopters that joined through the mining has then suddenly stopped. And that had a massive effect on Ethereum relative to the rest of the market. This here is Ethereum relative to Bitcoin. And what we see here marked with this blue arrow, that was the move from proof of work to proof of stake. And Ethereum underperformed Bitcoin by almost 80%. So it had to go all the way down to the depressed prices of the beginning of 2020 to then now recently recover again due to the treasury story. Of course, ideally, we always want to be contrarian, as in we want to buy when nobody wants to buy, when everybody is in losses, when everybody is giving up, and we want to sell when everybody is excited about the asset. Now, currently, everybody talks about Ethereum because most people are in profit. Have a look at this chart. This is the percent of ETH supply that's currently in profit. It's between 100 and 0%. And the best time to buy Ethereum is whenever we are close to 25, maybe 50%. And that was also here in the middle of April the case. But now we have already reached the top. Now 97.7% of the Ethereum supply is already in profit. And that doesn't necessarily mean that we have to come crashing down again, but it definitely does mean that people every now and then are looking for an exit, and that we have to see a constant flow of future demand to push the price higher. It's now harder to push Ethereum higher than when everybody was in losses and the sell pressure was already exhausted. This is very different now. Now we do see constant selling when people are in profit. This bottom over here, the middle of April, aligns with this bottom over here in the Ethereum dominance. And this bottom over here, right, the end of 2019, that aligns with this bottom over here. So really, people have to be in massive losses for Ethereum to be a potential outperformer going forward. Ethereum has already outperformed the rest of crypto by 100% in the last 4 months. Now, it's actually interesting that the number of active addresses hasn't really increased on the Ethereum chain. I believe this is because many people went over to the layer 2 solutions like Arbitrum and Optimism, because over there transactions get settled faster and they are still cheaper. But given that, the main Ethereum chain itself has also improved in efficiency. Here's the average transaction fee on the Ethereum chain directly. And while this was terribly high when everybody was trading with NFTs, this has come down to regular levels subsequently. Now it's okay to use the Ethereum chain directly. It's not too expensive. I always like to look at what is the smart money doing. And with smart money, I simply just mean the people that have already a lot invested in an asset. Because the people that are heavily invested, they either have very strong conviction, or at least they did the right calls in the past as per tendency, because they have all that capital. Right? Crypto is a game of both luck, but also of skill. And the more the trading game is played, the more the money overall concentrates towards the people with the skill. It's a bit like playing a casino, right? The casino does have the edge in the game. The longer you play, the more likely the money is flowing towards the casino. The same with trading. If you do have a trading edge, you tend to accumulate more and more capital over time. And so I'm always wondering, what are the whales actually doing? Now over here we see retail, as in how many wallets are there actually that hold at least one Ethereum? This tended to go up quite consistently up until the end of 2022. And since then, this is coming down. Small retail is not buying Ethereum anymore just to hold it in their wallet. Here we've got the number of wallets with at least 10 Ethereum, a very similar development. Here we've got the number of wallets with 100 Ethereum, even worse, as in we see more selling. Here we've got 1000 Ethereum, a very concerning chart, since that continues to decline already for the last 7 years. And here we've got the mega whales with 10,000 Ethereum. Again, not necessarily that encouraging. The OG whales in Ethereum are taking profit as the price is going up. Yes, there are reserve companies. Yes, there is the Ethereum ETF. And yes, we do see purchases through Wall Street. But the people that have bought very early, they are rather exiting over time. And I do not like that development at all. This is different to Bitcoin, by the way. Have a look at the number of addresses of at least 100 Bitcoin. Yes, this did not grow for a while. But since October, November of last year, this is going up quite a bit. This is $10 million worth of Bitcoin at least. And the number of such wallets has increased by roughly 3,000. So it went from 16K to 19K. We do not see a similar kind of accumulation trend for Ethereum. There's one metric that's very important to watch closely, and that's the percent of Ethereum supply that gets staked. If that suddenly falls down, we will see more and more supply potentially hitting the market. Long-term believers in Ethereum just buy the asset and stake it and get the token inflation, and thus outperform just regular buying and holding. So seeing this going up is good because it means that the circulating supply is rather shrinking, right? This is taking away supply from the market. Unfortunately, this number has not grown much in the last months. And it's important to closely watch this, because once this turns around, and if this really goes down and the long-term believers in Ethereum are suddenly taking profit, the people that stake, that would be a bad sign, because then additional supply hits the market, potentially depressing the price. So it works positively in one direction as the supply gets locked up, can of course also work the other way around as supply releases again. Now I don't have a crystal ball either, and there's definitely still some upside potential for Ethereum because historically we have seen the 21% in Ethereum dominance. I don't know if we're going to reach there, but definitely if we do see the current momentum continuing because the treasury companies buy more and because retail is so excited about that fact, then I think it makes a lot of sense to take real profit at this resistance. In the past, it was extremely hard for Ethereum to outperform the rest of crypto at this historical turning point. Now, some people call crypto just gambling, especially for the smaller meme coins, especially for altcoins. People say we're just throwing money at something, hope that it sticks, hope that it makes 100x returns. And while I do not believe that those massive returns are very realistic, I do think that crypto is not just a game of luck, but also of skill. It's a combination of both. And so the longer the game is played, the less important the luck component becomes and the more important the skill component becomes. It's a bit like with the edge in a casino, right? If you play roulette for long enough, then over time the casino will win because of that small edge, despite the luck component. And so I think it's very important to follow the right people in crypto. Follow the people that actually focus on the skill component. For example, I very much like Invest Answers. He does a lot of fundamental research. He's not always right, but he's trying his best. Or here, Memecoin. He also has some very interesting takes, especially on relative valuations. Ethereum relative to Bitcoin, altcoins relative to Ethereum, etc. It's very useful as well. Here, one of the OG Bitcoin investors, Anthony Pompliano. If you're not that much into active trading, but more into asset allocation, this is definitely a good channel to learn about the fundamentals and to learn about what's going on with the institutional investor side. It really doesn't take too much to figure out who's actually serious about the space and who's just trying to sell greed. The people that promise 10, 100, 1000x returns, that always talk about those micro caps, they tend to just buy those small assets beforehand, then promote them on the channel, potentially even getting paid by those different projects, and then of course pump and dump on the audience, basically make money from the audience. I've never taken any money from any crypto project ever, and I will never do so. I get the offers all the time, but I always reject them. I just don't like the conflict of interest. I play the long game. I think when the community grows, even if it's a bit slower, but it grows steadily, then that's much better than promising to become filthy rich and getting 10x and turning $500 into $13,000. It's really not that complicated. If you find things like this, alts will make millions. This is your last warning to buy the effing alts. Or here, 2 100x AI altcoins with a Lambo in the background. Then it probably makes sense to be rather skeptical, right? Those people just want to make money off of greed. Okay, so let's say those 1000x returns are very unlikely going to happen. Let's say this happens only to a small minority, potentially to the insiders, not just to people that watch YouTube videos. What is actually then a realistic long-term return in a space like crypto? Because obviously we take on more risk by buying Bitcoin, by buying Ethereum, by buying the altcoins. We're taking on more risk. We should also expect more returns. But what's realistic? It's not 1000x. It's probably also not just 3, 4, 5% per year. Let's try to approximate this. So at least we should get back the monetary debasement, right? This is USM2, and this is going up by roughly 6.8% per annum. This is how much the US dollar debases over time. And who would have thought the S&P 500 goes up by roughly the same amount year over year? Yes, there is a lot of volatility, but have a look at this. S&P 500 divided by the money supply. That's the long-term chart. So this starts in 1959, and since that point in time to today, the S&P 500 outperformed monetary expansion by only 50%, so less than 1 percentage point per year. The vast majority of the stock price appreciation is just monetary debasement. So this is at least what we can expect with crypto returns. getting the monetary debasement back. The same effect, by the way, holds true for gold. This is the gold price relative to the monetary base. So it's all going up by the same rate that dollars enter the system. But we are in crypto because this is a growth industry, right? More and more capital comes into the space now by an accelerating rate through Wall Street, through the ETFs and through the treasury companies. So let's try to figure out just with Bitcoin, so the least risky of the cryptocurrencies, what we can expect long term. And then of course, as we go into the more risk on stuff, we should at least beat that return. So here's the Bitcoin price long term. And of course, at the beginning, this tended to go up faster than it is today. This is a logarithmic scale, so we can see here the percentage changes. And what we have got in orange over here, that's the realized price. So this shows us the average cost basis of the market. The current price tends to hover around the realized price. So when we are currently below the realized price, it's a good time to buy. When we are above, it's not necessarily as good of a purchasing opportunity. But in general, the realized price tends to just go up over time. It goes up or it goes sideways. And so using the realized price, we can, at least to a degree, get rid of this volatility, right? Those 80, 90% drops in Bitcoin that make it so hard to predict how much Bitcoin long-term grows. Once we take that away and we just focus on the realized price, and let's say we use a conservative estimate, so we start off when the realized price went sideways for a prolonged period of time. Then we can compare the price over here with the price over here. We can see how quickly is this recently going up. And then we have an expected growth rate of the average cost basis of Bitcoin. How much should Bitcoin, if we ignore all the cycles, appreciate over the long term? So I'm dividing $52,000, that's the realized price today, by $20,000, that was the realized price 4 years ago. We get to a growth rate of 2.6, and then we put this to the power of 1/4. So this now annualizes this. It takes the geometric average over 4 years. So we get 27% growth per annum in Bitcoin. This is my best estimate for the Bitcoin price appreciation year over year if the market is not timed at all. If we don't buy the bottoms and sell the tops, if we just buy and hold and keep this running for the long term, 27% per annum is my expected long-term growth target for Bitcoin. 7% of that roughly is monetary debasement. The other 20% of that is just adoption, new investors entering the crypto space. Now, we are not necessarily happy with 27%. So we can, of course, time the market a bit, right? We can buy when there's money flowing into crypto. So this is the stablecoin market cap. It goes up since October of 2023. And we can avoid crypto when the space is rather shrinking and the stablecoin market cap is going down. This year was the Terra Luna collapse. And during that bear market, we also saw FTX blowing up. Or we can time the market even more precisely using the realized price, right? As we already said, instead of using this as a long-term estimate for the growth rate, we can also use this as a market timing mechanism. We buy much more whenever the price is below, but in general, we dollar cost average in. We just increase our exposure whenever the market is extremely depressed. But again, we are currently quite far away from that realized price. And it does not necessarily make sense to wait until we dip below, because sometimes we see a massive rally. This is when Bitcoin moved from $300 all the way to $20,000. So if you waited to hit the realized price when Bitcoin was at $500 and you missed out on a 40x return, that would have been not the best idea. So this gives us kind of like our minimum bar, right? If we buy and hold Bitcoin, we should expect at least 27% per annum. If we now trade actively, we should get more return like this. Now here's the difference of this channel to most other channels that you see on YouTube. Those people here, they don't share what they are making long-term with their crypto investments. They're just pumping and dumping. But I'm willing to share my returns, and not just in US dollars, but actually relative to what I would have gotten had I just dollar cost averaged into Bitcoin. So this comes directly from my personal Excel sheet. It's monthly data. This is 4 years of data roughly. And had I just dollar cost cost average into BTC, I would have been over here, but instead I got this return over here. I 3x outperformed just buying and holding Bitcoin. And if we annualize this, right, we take this to the power of 1/4, we get to an alpha of 31% per annum. Which then, if you multiply this with the Bitcoin return, brings us to a fiat return of 67% per annum. And so this is what I believe is realistic long term in this market. This is a growing market. We get above average returns because of that, but it's also an inefficient market. It's a market where there's a lot of mispricing. If we learn enough about certain mispricing patterns, like let's say certain pump and dumps that tend to deflate very long term, or let's say about tokenomics, where we see some altcoins underperform other altcoins very consistently. When we look at those pricing inefficiencies, we can have constant outperformance. I don't think it's all just luck. It's luck and skill. And so I don't stop just sharing my own trade performance. I actually started with something. 1.5 months ago, I started a capital pool here for the premium members. The pool has unfortunately already closed. We have hit the deposit limit, but this pool so far is growing pretty much at the rate that I would have expected. It's now at 78% APR. And so far, it only had a maximum drawdown of 2.6%. Now, of course, the volatility is likely going to increase over time, but still, this is the kind of performance that now the community members get just by parking their capital in that pool. And every trade that I execute gets executed in this capital pool as well. It's completely passive return. Now, I had to close the deposits for that capital pool because I first want to try this out. How does it actually work when more people invest? How does the platform work, etc.? So I keep this running until end of the year, but by beginning of next year, I will open another capital pool. Until then, I will of course continue to share my own trades. For example, over here on August 7th, I started entering a Pudgy Penguins short relative to Solana. And since then, Pengu underperformed Solana by 20%, which then led to a nice gain of 32K for the community. Of course, I get my share here as well, but the vast majority of those gains go directly to the members. And so really, instead of just hoping for the next 100x return, I think it's much better just to constantly compound the money. Because especially with those small meme coins, we can't really invest much, right? We can only invest maybe a few hundred or a few $1,000s, hope for the lottery ticket win, hope for the home run. But when it actually comes to real investing for thousands, tens of thousands, hundreds of thousands of dollars, we can't just bet this on a single rug pull. We have to go about this a bit more systematically. And so really, you only have to watch 2 videos to copy trade me. The first one is using perpetual futures on Hyperliquid to bet on relative valuations. And the second video is risk management with relative valuation bets. Extremely important, because if you don't know how to manage your risk, this can end up not so nicely. You only get maximum drawdowns of 2.6% if you know how to properly manage your risk. But then once you've watched those videos, you can simply copy trade me. But I want to go one step further. Some of my trades, they tend to outperform so consistently that I'm actually okay with giving the following guarantee. Once you have joined the membership, the premium membership of this channel, you've watched those 2 videos and you've joined the community, then I will send you my favorite trade. If you do not make money with that favorite trade after 1 month of holding that trade, then I refund you the membership fee 100%, no questions asked. So you basically get access to this entire tutorial section 100% for free. And you can copy trade everything that I do. A strategy that's constantly making money with the community pool, and it has worked for me for the last 4 years. You get all of that for free if this very first trade that I'm going to send you after joining is not going to work out in the green for you. The membership is currently $125 per month. If you want to be the first people to access the next trading vault at the beginning of next year, then I very much recommend to join even the yearly membership. You can also switch to annual membership at any point in time, but the current copy trading pool has already been closed. Existing members, of course, will get early access before the 2026 pool closes. But again, that might be your next step if you don't want to risk an entire annual payment, which is now $1,250. Feel free to simply just test it out with 125. And again, this is pretty much risk-free since you will get my favorite trade. And if that doesn't work out, I will just refund you. I take that risk. A link to Premium pops up on the screen directly over here. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. Cheers.